CBILS application deadline approaches, businesses focus on getting in better financial shape, and gloomy prediction on insolvencies. All of this in the latest Business Finance Bulletin. Well, here we are at the end of September, and the big thing for small businesses who have been financially impacted by the coronavirus to take note of is the fact that the CBILS loan application deadline is now fast approaching. The deadline when you have to get your applications in by is the 30th of September. Now, the big thing that the government has recently announced is that it's given the banks some latitude in terms of how long they have to review the cases. They now have up until the end of November to review and process those applications. So it still means, though, you need to get an application in on the lender's desk by the end of September. So you've only got a matter of weeks now in which to get those applications in. In terms of bounce back loans, well, that deadline is still set as the 4th of November. So a little bit more time there if you can kind of think you only need less than £50,000, which is where the bounce back loan comes in. So this has been a great lifeline for many small businesses. So if you are thinking that you need a bit of extra cash in order to see you through these troubled times, the deadlines are fast approaching, so get your skates on. The kids have gone back to school, the summer holidays have finished, and it does feel that business owners are now coming out of this 6-month hibernation period that we've had because of coronavirus. And that's kind of very much mirroring the conversations I've had with business owners over the last couple of weeks. There's very much been a mind shift. Businesses want to put the past behind them and now focus on the future. And this is something that's come out from a recent survey undertaken by Hitachi Capital Business Finance. And the business owners they spoke to, 27% of them say they are now anticipating growth. And that's up from 14% in the previous quarter. So clearly business owners are feeling a lot more confident. The survey found that 83% of them say that they're actively now planning growth. So it's a really good positive sign. The survey found that there are 3 key areas that business owners want to focus on over the rest of the year. The first of them is reducing fixed costs. Now, with many businesses still having employees working from home, looking at fixed costs is an obvious area to save money. And in fact, 61% of the businesses surveyed said they have plans to reduce their fixed costs. And that's up from 39% in the previous quarter. The next priority, well, that's better managing cash flow, with 32% of business owners saying this is going to be a priority for them. And that includes better managing late payment, which has always been a problem for small businesses, but obviously that's been exaggerated over the last 6 months. And the final area that business owners want to have a look at, well, 21% of them want to review their borrowing commitments. Clearly, businesses have taken on a significant amount of debt between bounce back loans and CBILS loans over the last 6 months. And obviously that debt has to be paid back. And so businesses will be focusing on managing those borrowing commitments. So great to see that there are 3 key priority areas that businesses will focus on. Which one of those are you going to pay attention to? Although in the previous section I mentioned that business confidence is starting to increase again, clearly there is going to be a lot of damage done to the UK economy, and that's now going to start coming out over the next 12 months. The trade credit insurance provider Atradius has predicted that there's going to be a 27% increase in the number of insolvencies in the UK, and that's the 9th highest increase globally. So we can see we've got quite a challenge ahead of us. When we look at the gross domestic product, the GDP, Atradius estimated that this will fall by about 4.5%, one of the highest in Northern Europe. So we've got a big task ahead of us. Going back to insolvencies, the first half of this year, Atradius said, saw a 20% drop in insolvencies compared to the first half of 2019. Now, I've covered this point before. We know that this is kind of an artificial reduction, mainly because the courts were effectively closed for many months. There were moratoriums that before action could be taken by creditors. So all of this has kind of stopped insolvency activity, but that's naturally going to start picking up again. So we can see there's troubled times ahead. So one thing that you've got to be careful of if you provide credit to your suppliers, make sure you do significant due diligence. When you're giving credit to suppliers, you are effectively acting like their bank. So you need to think like a bank. Make sure that they are financially sound. Do good financial due diligence before you extend credit, because you don't want to get caught out if that business goes into insolvency. On the other side, of course, if you're facing financial problems, the key message for me is seek professional advice. Go and see your accountant or a licensed insolvency practitioner in order to help them kind of take you through the whole process and sort out the wood from the trees. It's a really important time now to take professional advice. Here we are at the end of another bulletin, and as ever, I hope you enjoyed watching it. If you did, please don't forget to give it a like and a share and subscribe to this channel. So that's it for another week. Look forward to being with you again. Have a safe, profitable and healthy week.